the Strait of Hormuz being open. So Iran said, in line with the ceasefire in Lebanon, the passage for all commercial vehicles through the Strait of Hormuz is declared completely open for the remaining period of ceasefire. So we have now completely reached consensus in the cycle of market emotions. You'll remember as we were coming into our profit targets of our short setups, and which was only 14 days ago, that we were down inside of a profit target for a traditional short setup. That was this, coincidentally, that was this low down here. And in the last 14 days, we've gone from basically despondency, depression, into the whole cycle of market emotions in those 14 days. And we've gone from depression, hope, relief, optimism, excitement, thrill. Now we're in euphoria. And this represents, ironically, the point of maximum financial risk. You can see here, this is the Fear Greed Index. You can find this lots of different places. All the major sites have this. Just type in Fear and Greed Index. It's not extreme greed right now. So there's still more to go if you think about it from the perspective of consensus. But we are inside of setups that are going to be incredibly important for them to defend. And I'm going to point out a couple reasons why. First of all, the dollar is still inside of shorts and it's weakening. If the dollar is weakened, there's a -0.9 correlation here with the broad markets. So dollar down, indices scream higher. The opposite is also true here when we're thinking about the US dollar in how it continues to make these lows and continues to weaken. And so we're actually going to be trailing here our Thursday, Friday highs to lows as a next measured move. And there is room for us to squeeze up into resistance. And what is interesting is that these previous lows, both of them, a 38.2% line and a 50% retracement, would really keep the markets continuing to rally below the 98.04. But that's an important line in the sand. The rally continues inside of the indices, in the currencies and in the commodities, for that matter, below that 98.04 is the next measured move in our series. Bank is going to scream higher. Bank is going to gap up here at the open. So that will be a continuation of its extensions. And then there's the VIX. And there's a lot of questions here that we're going to have to answer going into the weekend. But one thing that's very interesting here is that although the extension shorts are still in play here, you can see the extension shorts are still in play. We ran right into those levels. This was a profit target yesterday of an intraday long setup. But we also have the historic Vixplosion support level, which exists from the old contract lows to new contract highs. The old contract lows, the April contract lows of the VIX, to the new May contract highs were right inside of a 50% retracement. And we've been documenting this over the last 8 years. When the VIX makes this pullback, if it breaks it, great. The indices continue their uptrend, and for the most part, the markets go up and to the right. But there are brief moments where there is a risk-off type of event, or a profit-taking, or a hedging, however you want to look at it, a protection trade that goes on in the form of a long volatility trade. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.